Hey, Bill Soriano here, and I wanted to make another quick video here for this GBPCAD, the pound CAD trade that I made a video about yesterday and showed you my results from this today. So I did end up taking this trade. I missed it yesterday or the day before, but I took it, but I took a bad entry on it. So what I did was I'm currently up 40 pips on this trade here, as you can see, and I have my stop loss moved to just about break even. That's on half of the position. I already sold half of the position at a 40 pip gain. So that is right here. I posted this in the group. I sold half of my position at a 40 pip gain, but this pair actually this was an easy 150 pip win. I just missed it. Yeah. So anyway, let's look again. We're going to look at the 4-hour chart here. As you can see, it's in a straight downtrend. If you do look at the daily, you'll see that that confirms the downtrend as well. But usually, if you get a downtrend like this on the 4-hour, that's good enough confirmation. So we're looking for a point of entry, and at the time we identified this 4-hour candle right here. This is a 4-hour banker candle. If you need more information on that, get in touch with me to get our free week of training so that you can see what I'm talking about there. But this was the 4-hour banker candle, and as you can see right here, this candle right here comes up and just hits this banker candle right to the pip, okay, and then it drops. Now, we don't enter trades just when it hits the 4-hour banker candle. We look for additional confirmations. However, just to show you something here with this trade, this is what we call a signature pattern. You see this consolidation right here, and this again is on the 4-hour chart. It makes a quick move up, then it makes a move down, and then it comes back to this banker candle right here. Okay, so it's a signature pattern. It's a consolidation followed by a quick move one way or the other. So in this case, it goes up first and then it goes down. And then the real way that they want to take this is down. So it goes up first, then down, then pulls back to the banker candle and then drops. Okay. Now, when the 4-hour banker candles hit, we have alarms set on there in trading view so that we know to go check out the pair. And then we go down to the 1-hour chart to look for our additional confirmations. Now we have 3 confirmations we look at. We need to get at least 2 of them. And again, if you want more information on these confirmations, you have to get in touch with me to get your free week of training so you could check everything out and eventually decide to be a customer of ours. But the 3 confirmations is we either get a confirmation from our ATH indicator. This is our brand new proprietary indicator that's only available to our team. You do get this indicator for free when you become a customer on our team. So you don't get it for the free trial, but you do get it when you become a customer on our team. So anyway, you do get this exit manager software right here, absolutely free, just for taking free trial. Okay, you get access to the group where the download information is at for this exit manager software. So anyway, we're looking for either an ATH signal, a 2x2, or double confirmation. So we get or double mitigation. I'm sorry. So we get one mitigation right here when this comes up and touches this banker's candle right here on the 4-hour. So we're going to drop down to the 1-hour, and we just want to mark this candle. This is the 4-hour candle that hits that banker candle. So right here, when you drop down to the 1-hour, what happens is a couple candles later here, right here, we get the ATH confirmation that this is going to go down. That's what this arrow is right here. And again, this arrow does not repaint. It will go on and off during the period where this candle is live. But once this candle closes, if it's here, it'll stay here forever. If it's not there, it'll never show up. So this indicator is not repaint. So this is now one confirmation. Now, you know, sometimes when you get a really good trade set up like this, where you have a banker candle that's really big like this, and then you have an engulfing candle right after it, and they leave some imbalance in here, and it's all built off of a signature pattern. which is one of our 2 trading patterns that we look for, sometimes you can make the decision to go ahead and take this trade just based off of this one confirmation. And if you did here, you would have to wait for this candle to close. You would get in right here, and you would have 145 pips down here. See? Now, let's say you didn't take the trade, you wanted to wait for another confirmation. So you're looking for a 2x2 or double mitigation to give you a second confirmation. So what the 2x2 is, as it moves down here, it moves down, it pulls back, and then it makes a lower low right here. Okay. So as you see here, it comes down. So you have 1, 2, and 1, 2. So now you have a 2x2, right? And in addition to that, the 2x2 automatically has a break of structure right here. So it comes down, right? It pulls back, it makes a lower high, and then it makes a lower low. That gives you your 2x2. Now, after a 2x2, you can decide to enter on a pullback. Now, sometimes some people may look for a 50% pullback or a pullback all the way to the 71 Fibonacci range. So if you take the Fibonacci from right here to the top here to where it comes down here on the pullback, that's the lowest point right here. You see that this pulls back and it goes right above the 50% range right here. Okay. So, with my trading plan, it's safe to take the trade if this is the second confirmation. Now, first we got the ATH indicator, then we got the 2x2 followed by the pullback to at least 50%. Okay, so if you take the trade when you touch this 50% line, that's 150 pips. So it's really just it's a little bit better entry than if you get off at the open of this candle right here. So it gives you a little bit better entry by a couple pips. Okay. Anyway, so that is the second confirmation that we look for. So let's say you missed that one as well, or you want to get all 3 confirmations, right? You want the ATH, you want a 2x2, you want double mitigation. Well, what happens is it comes down, pulls back up, and then as it comes down here, it creates a new banker candle right here. And now there's a new 4-hour banker candle right here. And as you can see, as it comes back down, then it comes back up, it mitigates that banker candle. So that's actually double mitigation now, because we already had the mitigation on the 4-hour, and now it has mitigated the 1-hour banker candle right here that got left behind after it already moved down. So if you missed this trade, you had a third opportunity now, right? You didn't take it off the ATH. You didn't take it off the 2x2 with the pullback to 50%. So now you get double mitigation. And if you would have taken this trade here, you'd currently be up over 100 pips. Okay. Now, I got in this trade off of a pullback right to here. So I got a very bad entry on this trade. So here's my entry down here. This was an entry I took yesterday because I got concerned that it wasn't going to pull back and give me this double mitigation here, but it actually did. So again, there's all three confirmations exist on this trade right here. And that's the 3 confirmations we look for once the alarm goes off on the 4-hour candle and we drop down to the 1-hour chart. And so this trade actually shows you how you could have gotten in off of just 1 or 2, or actually waited for all 3 of the confirmations to get in. Now, currently, you see we're up 43 pips right now. And so, I expect this trade to go. And what I'll do is I have the exit manager running on this trade. So like I said, it closed half the position at 40 pips, right? And then it moved the rest of the position to break even, okay? Now I adjusted it a little bit after break even so I wouldn't have a loss if it does pull back, because if you move it to break even, in this case, you're buying it, so you'll pay, you're buying it to get out of the trade. And so, you'd have a little bit of a loss based on the spread, maybe. So anyway, it closed half the position when I was up 40 pips. I moved the second half to break even, just a little bit below break even, maybe break even plus 1 pip or one or 2 pips there to factor in the spread. And then I have it trailing the stop. I have it set for a trailing stop loss based on the time frame fractals. So it's on the fractals are set on the 1 hour chart, which is the chart that I took the trade on. And so as this makes new lows and then it pulls back and makes lower highs, it'll adjust the stop loss down on those lower highs. So that's what I have running. And again, guys, you get this exit manager software absolutely free just for taking the free trial, you know. So, you know, I encourage you guys, if you're interested in Forex trading, or, you know, you don't know anything at all. A lot of the people in our community that are in there knew nothing at all when they started trading. Even if you know a lot, but you're just not very successful in your trades, you know, you're not able to get that, you know, 3, 4, 5, 6, 7, 8% growth on your account every week. You know, we have people doing 10% or more, but you know, on average, 3, 4, 5, 6, 7% growth every week on their account. If you're not doing that, you want to get the free trial and get started. So, Bill Soriano from Pittsburgh, and have a great day, guys.